Hello everyone and welcome to Day Trader S&P 500. Today is Saturday, January 4th, 2025. This is Dale Woodson, editor of Woodson Wave Report and the YouTube channel. As always, we want to get our YouTube subscribers caught up with our newsletter subscribers. I want to start today with the Qs. We haven't looked at those in a while. Different colors are after hours and before hours. There's the all-time high, and on December 16th, we have a wave 1 down in parentheses, a wave 2 up. We have a third of a third wave developing. We have a 1 down. The 2 up right now is right on the 50% retrace. Again, we always ask ourselves when we make a chart or a trade, where is it wrong? This labeling of 303 is wrong if this move up goes above the wave 2 with the parentheses on it, okay? This 2 wave count with the parentheses is wrong if it goes above the all-time high. So we're looking at a possible third of third wave at 2 degrees of trend. This one and the one with the parentheses, okay? If that 2 stays below this larger degree wave 2, then here's our wave 3 targets here. 1-to-1 relationship is 497.76 and a 1.618 is 477.07. That's the larger degree wave 3 with the parentheses around it. Where is it right? We already talked about where is it wrong. A move below this wave 1 low, which is 505.71, confirms that the wave 3 of 3 is in play, and a move below this wave 1 low with the parentheses of 505.40 confirms that this wave 3 with parentheses, larger degree of trend, is in play. So we always know to the penny or 1/100th of a point where we are right and where we are wrong. The beauty of Elliott waves, okay? So that's the Qs. I want to take you guys to our last report before the market opened on Friday, okay, the 3rd. There's our triggers and targets auto trades, which is going really well, where we make trades and give them to the futures broker, and they make trades for you. You open an account with them. They're a futures broker, I'm not, and they'll trade my trades in your account. Okay, we have all that confirmation, our instructions there, okay. Here's our Fibonacci time spirals. We got a couple of them working, and they're working really well. This is the one that started from the all-time high on the 6th. It made a high as close as it could because the turn date was on a Saturday. Okay, so you can see it hit right there. No slippage, couple slippages along the way. Pretty much did alternating highs and lows, except for, I think there was one in here. It was consecutive highs, or here it is at the end. The 89 and the 144 marked 2 consecutive highs, otherwise it was alternating. Then we started another one from that December 7th high, and that's here below, and that one's in progress, doing the same thing. This one recorded 2 consecutive lows in the beginning of the pattern, very early days, the 3 and 5 day turn dates, if you will. And here we're looking at the next one, which would be January 10th, and the one following being the 31st, okay? This one caught the high within 2 days. The slippage is very minimal there, okay? Then we can see we've got the E-mini futures here. This was, again, before the market opened on Friday, yesterday. We have 5 waves down at a smaller degree of trend here to make the larger degree wave 1, which is 58.66. That becomes our downside trigger. Okay, from there we had a wave 2 up, which was a near perfect 786. I think we'll look at that in the chart later. And then we have a 1 down and a 2 up, and although they're not labeled, we have a 1 down and a 2 up. You can see it's sitting right near the 50% retrace before the market opened. We'll update that. But here's our wave 3 targets from that wave 2 high, and here's our wave 3 at a larger degree of trend with the parentheses from that wave 2 high, okay? So this third wave, if you will, is wrong if it goes above this wave 2 high, and this down here on wave 1 and 2 up is wrong if it goes above that wave 2 high, And this wave 2 in parentheses is wrong if it goes above the all-time high. That's where we know we're wrong. 2 within 100th of a point or a penny. And then again, here's that downside trigger. We know that wave 3 down is in play when the wave 1 low is taken out. So that would be a third wave of at least 2 degrees of trend, and possibly 3, depending on how this plays out. Okay, so that's kind of exciting stuff. Here's all of our verbiage there. Okay, basically the same thing I said. This is what we've been looking for since last October. It actually got confirmed at the smaller degree of trend. We have 5 steps, and we achieved them all, or the market achieved them all, and that is these 5 steps here. This 1 at 6107, the 2 up, the 3 down, the 4 up, and the 5. It seemed to fail all the time when it got to the 4. We never got that lower 5th wave, but we did. Okay, so we got a confirmation of a change in trend, at least in the short term, if not intermediate. And now we're looking at the next degree of trend. So see that 1 down there and that 2 up. We need to see a move below 1 to confirm 3 in parentheses is in play. And that plays out here. Okay, so we got those. That was good. Looking virtually every day for 14 months. Finally got it. Now we need to see it at a higher degree of trend. This one right here, minuet. Okay, we got the 1 down. We got the 2 up. It was a 786 retrace. Now we're looking for 3 down, and it'll be confirmed with a move below that wave 1 low at 58.66, which is right here. So that's what we're looking at. Okay, where is it wrong? A move above here, 6107. Where is a bearish count right? With a move below 58.66. So we'll see how that plays out, especially with the turn dates coming up, the 10th and the 31st. I think that's pretty much all of that. We updated this for our monthly subscribers to the newsletter. They're more short-term oriented. We have a lot of day traders and scalpers who use this because we use a lot of 1 and 10 minute charts. So we moved to a short position back at 6113. That was of some time ago. We moved short on the short term with the move below the other low on 12.6 and another one against the 12.6. Okay, long term, still need to see some things play out for that one that was 14, I think it's almost 15 months old from that October 2023 low. I think that's about it. Again, we're advertising the auto trades there, which are going very well. Customers are happy with that. Let's get to the other things here. Okay, let's just go to the January report. Let's do that, then we can get to the charts. Okay, we'll get to the January monthly that we put out early this morning. Okay, there's all that stuff there. There's our auto trades. There's how to subscribe to auto trades. Okay, here's our Fibonacci time spiral. Let me see if I can make that even. I think that's good enough. Okay, we have those 2 different time spirals I can show you guys, but I combined them both. The one from the July high and then the one from the December high, which is over here. You can see this one on the left here was catching all these highs and lows alternating. You can see right there, pretty darn good. Okay, and then we got to the 12.6 high, which happened on a Friday because the turn date was on a Saturday, 12.7, and now we're starting to hit these with this Fibonacci time spiral. Okay, it shows the next turn dates of January 10 and January 31. That's where we are here. Okay, these are pretty tight, so we'll see how that goes. But we had that confirmation of a change in trend with this move down. We'll see if that continues. It should. Okay, here's our time spirals. There's the one from the July 24 high with the slippage in there. And again, hit on Friday, Saturday, market was closed. By the way, this time spiral was on the cash, not the E-mini futures. Okay, and then yeah, we have the other one here. Okay, which shows the next one on the 10th and then the 31st. Okay, so let's get into weekly. Here we have our Fibonacci retracement targets for that decline. we'll get into this here. Big picture weekly. We have two different wave counts, one in purple and one in black. We have this expanding triangle, which we called near this B wave high. I think we were the first in the world to do that. But again, the first pattern I learned way back in the 90s was a fourth wave triangle by mistake or by accident. I had no idea, but anyway, I learned it, so it's hard to skip one past me. Okay, we have a black wave count and a purple wave count. The black wave count calls that 5 as a high. You can see the 4 here on the triangle. And then we've got an A down and a B up in an expanded flat, if you will. Wave C should come down below the wave A low. I probably should have moved that a little bit further down. Okay, so that's what we're looking at there. A completed 5-wave pattern, an A down, a B up. That's a little bit of a stretch because the B waves usually don't go that high, but it's possible. Okay, and the purple wave count calls this wave 1 up here, where that 5 in black was, wave 2 down here, and then wave 3 extends or subdivides into a 5-wave pattern there. Okay, 6069 was the target where wave 5 equals 1, and so for the high is 6099. Okay, and then the larger wave 3 would even be potentially higher at 6118. We'll have to see how that plays out. But those are the two wave counts we have on the longer term big picture going back to that wave 3 high in January of 2018. By the way, on a side note, this is an expanding triangle. You get higher highs and lower lows. And, you know, I don't like to tie news into things, but during Trump's presidency, during this time, we had all those tariff wars and stuff, and that's where you get all this higher high, lower low, higher high, lower low, all that volatility in there. Not sure if that'll happen again starting in 2025. That would be another fourth wave if that would happen, but that's what did happen, okay? You know, I don't like to put news or politics into the math, but I think it's the other way around. The pattern dictates the news instead of the news dictating the pattern. But we've proven that hundreds of times in the last several decades, going back to the 90s, with the bond market too. Okay, here's that primary count, which I just told you about, and the alternate count. There's the verbiage of it here. Okay, and we did that already. Okay, let's move to the NASDAQ here. All right, we've got a daily chart. There was the previous all-time high, and this is important. This move down here for wave A is 5 waves with no overlap, so it's not a leading diagonal like the other indexes, like the Dow and like the S&P. Okay, so it counts the black as A down and B up, and you can see the targets there. Okay, it went slightly above that B wave being a 1.618. Okay, so anyway, that counts A down, B up. Of course, C down would be down here below wave A if that plays out. The other count is the blue count, which calls this correction complete down here. And then we've got a 1 up in blue, a 2 down, a 3 up, a 4 down, and a 5 up. Okay, and that's where we're looking at. It went past it, of course, so we'll see how that plays out. For what it's worth, that black wave count, it counts better, believe it or not. So we'll see how it plays out. And that's where I talk about the 5 waves down, which makes it much more believable, if you will, to count that as a B wave high, expanded flat. It's way up there though. Okay, and as I say there, the move down, obvious 5 waves with no overlap or leading diagonal, so it counts cleaner as a B wave high. Here's our Dow daily bar from that 2022 low. You can see we got a 1 up, 2 down, 3 up, a 4 down, 5 equals 1, and it went just above it. Okay, so we'll see. The high in the Dow is on December 4th, which is near that turn date of December 6th. We'll watch this play out. Again, we're looking for our signals for a change in trend. We did get confirmation, so that'll carry over to the other indexes. Okay. By the way, I counted this up, 5 waves up, 9 waves up, Impulsive waves are 5, 9, 13, 17 onto infinity. And we counted 9 waves up, which makes that seem impulsive. So we should get a correction off of that high. We don't expect wave 5 to go much higher, if at all. If it does at all, okay? This pattern appears complete or nearly so. Bond market, so much going on in the bond market. Okay, let's go top down here, okay? From the year 2020 low, we have a 1 up with a Roman numeral, a 2 down, and wave 3 up is up here in green. It equals 1 at 7.255. That's the biggest degree of trend, and that's the minimum extension for wave 3, because it could be a 1.618 or more. Okay, so biggest picture, and that is cycle degree. Okay, 1 up, 2 down, there's 3 target. Okay, so within that 3 we have a 1 up with a circle, okay, a 2 down with a circle, that's primary degree, and wave 3 equals 1 at 5.367%. Okay, so that's the minimum. Again, it could get a 1.618 or more. Okay, so we've got that 1 up, 2 down, Roman numerals. Then we got the 1 up, 2 down with a circle. Now we have 1 up, 2 down. And recently we had a move above this wave 1 high with a parentheses, which confirmed that our wave count is right, which confirmed that wave 2 down is complete near the 382. Okay, so 1 up in parentheses, 2 down, 3 equals 1 at 5.032%. That's our initial target. That's the smallest degree of trend, which is intermediate with the parentheses around it. So we're looking at a third wave. Third waves are the most powerful. They have gaps, they have extensions. They generally go at least 1.618, if not higher multiple, like 2.618 or 3.618. So the trend in interest rates is up, and we've got a validation right here with a move above that high. Where's it wrong? This wave 2 has to hold. Bigger degree of trend, this wave 2 with a circle has to hold. Any moves down should stay above these second waves of 2 different degrees of trend. And if you want to get to it, the third biggest degree of trend is down here. So rates are going up. Okay, and this explains it all. There's the 3 different degrees of trend and the targets in writing from up there. Okay, let's move on. There's all of our triggers and targets. Unbelievable direct hits on the bond market for literally years, not exaggerating. The gold market, and we're going from the most recent wave 2 low here. Okay, we have direct hits all over here too, but this is a 5-wave pattern up for wave 3 of the larger degree, wave 5. Okay, that's a 1 up, 2 down, there's 3. Here's our wave 4 targets. You can see them there. It hasn't reached any of them yet. And keep in mind, fourth waves are long and sideways and choppy and overlap by nature, so this could take a while to play out, but we're looking for wave 4. Here's our Fibonacci targets. All right, it should not go below the wave 1 high back here at 2081.82. Okay, once wave 4 down or sideways to down is complete, we should get wave 505 at a new all-time high. Again, this might take a while to play out because it is a fourth wave, and there's all of our triggers and targets there. Here's where we talk about fourth waves, long and sideways, and here's some of our triggers and targets and all that stuff. Okay, so let's get to the charts. Let's see here. I think most of this will be a review. There's the weekly log chart of the S&P cash. Okay, here is the daily chart. By the way, I use stochastics, I use volume, and I use exponential moving averages. Usually just take them off because they get in the way, but I thought I'd leave it on to show you guys. Okay, this is the daily chart. Okay, if we've got from the August low, the most recent 5-wave advance, to the most recent high there on our turn date in December, these are the targets we're looking at for a retracement of just the last 5 wave advance, okay? And these are small, so I'll read them. The 382 is 57.28. The 50% is 56.12. 618 is 54.96. And the 786 is 53.31. If it goes above the previous all-time high, these downside targets are out. If it goes below this low down here at 51.22, then it means the correction is correcting more than just this last 5 wave advance, okay? So that's the picture on a daily chart of the S&P. I think this was the one with all the turn dates in it. I don't know if I can squeeze all of that into one page, but you guys saw that before with the 2 different Fibonacci turn date sequences, and there's the next turn dates there, okay? Let's go to the ES, okay, and I left that on there. I just like a clean plate, if you will, or a clean table. Let's remove that, okay, and you guys can see here. All right, I think I removed it, but let's make it full screen. There we go. All right, there's the all-time high on our turn date, and there's 1 down, 2 up, 3 down. By the way, that 3 was a 3.618. That's why we're including these 2.618 and 3.618 targets for wave 3 with the parentheses, because this 3 at a lower degree of trend gained a 3.618, okay? Then we have those 5 waves down make the larger degree wave 1. That becomes our downside trigger. By the way, our upside trigger is up here and at the wave 2 high. I took them off because this is obviously moving impulsively to the downside. Again, we know exactly where we're wrong, okay? So we have the 1 down to 2 up, 1 down, 2 up, and that is really close to, if not passing it, like it already did. You saw in that pre-market. So I may have, I'm going to show you guys this. This could be the one here. It could have extended, and then we get a 2 up. That number would have to stay up here. And let me just do that live, because I didn't update this. There. So you can see that is sitting right above the 50% retracement, okay? So the 2 here could go to one of those targets there. The 50% is just above it, okay? It looks like a near double top to within a point or 2. So we can recalculate those wave 3s if this wave 2 goes higher. Okay, so that is the, what is that, the hourly chart, okay? Let's get out of that. I don't know if we need to get down to 10-minute. Probably don't. Okay, let's leave you guys with, let's go here and get to that monthly report and scroll on down. And I really like this one. These Fibonacci turn dates are working, both of them. This one's going to be 233 days out, so I haven't extrapolated it out because it's going to be a long way off, okay? But this one here now is in play, okay? And there's those turn dates there, and there's the big picture on the S&P cash, and I wanted to get to, that's the NASDAQ and the Dow. We saw that. This bond market's going to be something else. I really can't emphasize, it doesn't matter what the Fed does or what they say or what anyone thinks. These guys are following the market, and this shows higher rates. And they're talking about cuts, and they're talking about 6 last year and went down to 3. Then they're talking about 3 in 25 and went down to 2. I say they're going to be raising rates because they're going to follow the market, and the market's in a third wave of at least 2 degrees of trend, if not 3. So this is something to pay attention to. Okay, that's it for this time, and until next time, take care, everyone.